But let's get more with our Bloomberg Intelligence senior analyst, Robert Lea. And Robert, I know you're not that keen to talk about why we're seeing the stock trading high today. So maybe just start with what stood out to you in the numbers.
No, I will answer that. I think, there is a typhoon signal late here in Hong Kong. It's early days. Volume is a bit thin. We'll see where the stock closes. But I would say one thing on the results call last night. I wouldn't call the tone of management downbeat in any way, but it was sort of lacking in vigour. You think, compare and contrast to someone like Tim Cook, this is the greatest phone we've ever produced, it's all really upbeat. There was a lack of strong messaging, and that was a view that both myself took from the call and several of my colleagues. But the numbers were solid. There was, it's hard to split hairs there, but it was well anticipated. There were no major surprises, there was no margin beat. And we did see incremental weakness coming through in the ads and fintech business, as I think we flagged beforehand. But I guess short-term stock price movements are normally driven by sentiment. On that front, I would say no, nothing new. But as you've said in your intro there, looking longer term, the earnings growth for this company is going to revert to the mean. They'll deliver roughly 10 to 12% earnings growth next year, and we have got incremental weakness coming through on two of their core divisions. So the risk profile of this company is increasing.
Well, speaking of next year, what do you think the biggest opportunities are for Tencent for them to be able to get 10 to 12%?
It's a very, it's a very broadly based business, a well-diversified business. So on that front, whilst their risk profile relative to themselves is increasing, compare and contrast with the likes of Alibaba and e-commerce plays, there's far less exposure to the consumer front or whatever. So you've got a good diversification of businesses, and I don't want to contradict what I've just said a few moments ago. But, as I've mentioned before, games, you're only as good as your next big hit. DNF Mobile has been a major driver of this year, and that has largely played out. So it's a bit of a mean reversion. For a company of this size and scale, 10 to 12% earnings growth, there is nothing embarrassing in that. But we are, at this point, unlikely to see the 30 to 40% growth that the company is due to deliver this year. Can I just say one other very quick thing?
Sure.
And this applies to all the internet companies. Obviously, coming out of lockdown, they really kept the lid on costs, and even many companies were reducing headcount and keeping costs under control. There's a lot of pent-up pressure being built up, and now we are seeing companies beginning to increase the costs again. So again, that's another issue that they have to deal with next year into a slowing economic environment.
Well, and I guess that points to the intense competition we see on the AI front as well, because there's that sort of race for who can have the most dominant tool and who can integrate it the best, who can monetize it the best. How's Tencent going on this front?
Yeah, I think, to be fair to them, they're playing the long game. They've not rushed in. They've not tried to overplay their hand. I think ultimately within the Chinese AI sector, scale win out. So I think, they do stand to be a long-term winner. But because it's a hyper-competitive market with price wars in both the AI cloud sector and also the mainstream chatbot sector, all these companies, Tencent included, will struggle to monetize, and the sector as a whole will remain loss-making for the next 3 years. The way that they can capitalize in AI is really through applying it to drive efficiencies and cost savings within their business, particularly for sort of game development. So I think that will help them, support margins to some degree, but, it's not going to drive the top line, and we're not going to see a major benefit on the bottom line for many years to come, unfortunately.
Robert Lea, thank you so much. Our Bloomberg Intelligence senior analyst there.